Good evening. Welcome to another edition of the 411 Talk Zone radio show right here on YouTube. My name is Leon Jones, and tonight I got another good one. Of course, I am working on the scam series, and it's very important that you understand that scams go on in every facet of life. And tonight, I want to talk about common types of investment scams. And crypto is in that, and promissory notes. They're all part of investing. Now, we look at investing as allowing our money to work for us, whether we put it in the stock market, CDs, bonds, crypto. But with everything else, you look at Bernie Madoff, a big investment scam. He had a Ponzi scheme. And the problem with a number of these investment scams is they take advantage of people who don't know any better. Look what happened to that company in Texas. A number of individuals had nothing left in their 401k plan. So you see, scams are always going to take place, but you have to know they are scams. And of course, there are resources out there that you can utilize if you've been scammed. Now, let me share my screen, and we're going to get into common types of investment fraud. Now, the threats to investors were determined by surveying state securities regulators to identify the 5 most problematic products, practices, and schemes. Now, the following were cited most often by state securities regulators. And the first one I just talked about, promissory notes. Now, in an environment of low interest rates, the promise of high interest promissory notes may tempt investors, especially seniors and others living on a fixed income. Now, when we talk about a promissory note, it is basically a note with written promise to pay or repay a specific sum of money at a stated time in the future or upon demand. Now, where else would you find a promissory note? In loans, particularly guaranteed student loans. See, what happens when you deal with promissory notes? They generally pay interest either periodically before maturity of the note or at the time of maturity. Companies may sell promissory notes to raise capital and usually offer them only to sophisticated and institutional investors. But not all promissory notes are sold in this way. Now, again, promissory notes may be offered and sold to retail investors. Some notes must be registered with the SEC, which is the Securities and Exchange Commission, and or the state or states in which they are sold or qualify for an exemption for securities registration. Now, most promissory notes sold to the general public also must be sold by securities salespeople who have the appropriate securities license or registration from their state securities agency. Now, promissory notes from legitimate issuers can provide reasonable return on investment or investment returns at an acceptable level of risk. Although state securities regulators have identified an unfortunately high number of promissory note frauds. Now, individuals considering investing in a promissory note should thoroughly research the investment and the people who are promoting it. Now, investors should be cautious about promissory notes with durations of 9 months or less, as these notes generally do not require federal or state securities registration. Such short-term notes have been the source of most, though not all, of the fraudulent activity involving promissory notes identified by state security regulators. Now, these short-term debt instruments may be offered by little known or perhaps even non-existent companies, and they extend promises of high returns, perhaps over 15% monthly at little or no risk. But if an investment sounds too good to be true, just like every other scam, it probably is. Now, something else, I talked about it a while back. Ponzi and pyramid schemes. Now, where have we seen pyramid schemes? Well, some say Amway, and we have multi-level marketing companies. They can be pyramids, Ponzi schemes, Bernie Madoff. Now, a Ponzi scheme named after 1920s swindler Charles Ponzi is a ploy wherein earlier investors are repaid through the funds deposited by subsequent investors. See, Charles Ponzi took investors for 10 million by promising 40% returns from arbitrage profits on international postal reply coupons. See, in a Ponzi scheme, the underlying investment claims are usually entirely fictional. Very few, if any, actual physical assets or investments generally exist. So, as the number of total investors grows and the supply of potential new investors dwindles, there's not enough money to pay off promised returns and cover investors who try to cash out. See a Ponzi bubble, it will then burst when the con artists simply cannot keep up with the payments. Investors are expecting that inspectors are expecting to receive. Now, when the scheme collapses, and it always does, investors may lose their entire investment in a fraud. In many cases, the perpetrator will have spent investment money on personal expense, depleting funds, and accelerating the bursting of the bubble. Similarly, a pyramid scheme is a fraudulent multi-level marketing strategy whereby investors earn potential returns by recruiting more or more other investors. Multi-level marketing strategies are not intrinsically fraudulent, and there are many legitimate multi-level marketing companies offering various consumer products and services. Now, what makes a multi-level marketing strategy into a fraudulent pyramid scheme is the lack of a genuine underlying investment enterprise or product upon which the strategy can hope to be sustained. Now, I did an earlier video on Ponzi schemes and multi-level marketing, but these are very common investment schemes because if you look at it, they're all promising you high returns on investment. And the next one, this is all too common, real estate. A lot of people are getting into real estate. Well, the promise of earning quick money through investments related to real estate continues to lure investors. Real estate investment scams are a perennial investor trap. So basically, state securities regulators caution investors about real estate investment seminars, especially those marketed aggressively as an alternative to more traditional retirement planning strategies involving stocks, bonds, and mutual funds. So, what happens is attendees at these seminars may hear testimonials from people claiming to have doubled or tripled their income through seemingly simple real estate investments, but these claims may be nothing more than hot air. So, two of the most popular investment pitches involve so-called hard money lending and property flipping. Now, again, you can go back to a few of my videos, and I talked about this. Now, when we deal with hard money lending, it's basically a term used to refer to real estate investments financed through means other than traditional bank borrowing. So basically, this type of loan gets its name from the fact that it would be hard to get from a traditional lending source. So when this happens, well, some firms or wealthy individuals specialize in making hard money loans, as these loans command comparatively high interest rates. But borrowers may seem to obtain such loans from retail investors as well. Investors may be tempted by the opportunity to earn greater rates of return by participating on a hard money loan and may or may not appreciate the potential risk, including as the borrowers credit the expected stability of income from the investment or time constraints. Now, when it comes to hard money, there are three players in a hard money transaction. You have the investor, the lender, and the borrower. So, what happens? Private lenders raise money from investors to lend to borrowers. If funds from different investors are combined, the investment vehicle used to purchase the property is known as a pooled investment, which is a security and, as such, is subject to the protections and disclosure requirements of securities laws and regulations. So, with traditional loans, are based on the ability of the borrower to repay using indicators such as credit scores and income. Whereas hard money loans are primarily based on the value of the property with which they are secured, which the borrower already owns or is acquiring with the loan. So, what happens with hard money? If the borrower defaults, the lender may be able to seize the asset and try to sell it. However, it may be harder for the investor to recoup the loan depending on how it is structured. So, something else I talked about, property flipping. We call it flipping houses. Well, property flipping is the practice of purchasing distressed real estate, refurbishing it, and then immediately reselling it in hopes of earning profit. Or a property flipper, again, a property flipper can use its own money to finance the flip or can seek financing from others. Property flipping finance through borrowed funds or outside investments can be done entirely lawfully, but it can also be a source for fraud. So, a scammer, for example, defraud potential investors in the flip by misrepresenting the value of the underlying property or the expected profit potential on the flip. Scammers may also misappropriate borrowed or invested funds to seek to use unwitting investors as straw buyers, with outside banks or mortgage lenders leveraging investors' names and credit scores to facilitate the scams. Now, here's one that, some people shout out to Reg the Bad Guy. He talks about crypto. I know Solomon Jones, he talked about it. But one thing you must understand about cryptocurrencies. Well, they came into the investment mainstream 7 years ago, back in 2017, as the values of some virtual coins and tokens skyrocketed, and that was led by Bitcoin. Now, shortly after the news featured coverage of new cryptocurrencies, coin exchanges, and related investment products, stories of crypto millionaires attracted some investors to try their hand at investing in cryptocurrencies or crypto related investments. But the stories of those who bet big and lost also began appearing, and they continue to appear. So, I'm going to say this before you jump into the crypto craze, be mindful that cryptocurrencies and related financial products may be nothing more than public facing bots or Ponzi schemes and other frauds. Again, before you jump into the crypto craze, be cautious or mindful that cryptocurrencies and related financial products may be nothing more than public facing fronts for Ponzi schemes and other frauds. And because these products do not fall neatly into the existing federal or state regulatory framework, it may be easier for the promoters of these products to fleece you. So, investing in cryptocurrencies and related financial products accordingly should be seen for what it is, extremely risky speculation with a high risk of loss. So if you have these average individuals saying they're making money off of crypto, question how much did they invest? See if they have a report. Because when something new comes out, you have to watch it with caution. Because again, when something is too good to be true, no, it is too good to be true. And the risk of loss is high. Now, social media, internet investment fraud. Well, social networking through the internet allows people to connect to one another more quickly and easier than ever before. So, investment promoters increasingly are logging on to find investors in their money. Now, a social network is a group of individuals or organizations who are connected through common interests, hobbies, lifestyles, relationships, faith, or other benefits. So, platforms such as Facebook, Twitter, LinkedIn, eHarmony, and other online social networks and communities have made it faster and easier for users to meet, interact, and establish connections with other users anywhere in the world. So while social networking helps connect people with others who share similar interests or views, con artists infiltrate these social networks by looking for victims. So by joining and actively participating in a social network or community, the con artist builds credibility, gains the trust of other members in the group. Now, in social online networks, a con artist can establish this trust and credibility more quickly. The scammer has immediate access to potential victims through their online profiles, which may contain sensitive personal information such as their dates, places of birth, phone numbers, home addresses, religious and political views, employment histories, and even personal photographs. Now, what happens is the con artist takes advantage of how easily people share background and personal information online, and they use it to make a skillful and highly targeted pitch. This scam can spread rapidly through a social network as the con artist gains access to the friends and colleagues of the initial target. Now, online fraud has many of the same characteristics as offline investment fraud. So learn to recognize these red flags. Number one, promises of high returns with no risks. Why? Because many online scams promise unreasonably high short term profits. Guarantees of returns around 2% a day or 14% a week or 40% a month are too good to be true. Remember that risk and reward go hand in hand. Offshore operations. Many scams are headquartered offshore, making it more difficult for regulators to shut down the scam and recover investors' funds. E-currency sites. So if you have to open an e-currency account, now again, if you have to open an e-currency account to transfer money, better use caution. Sites may not be regulated, and the con artists use them to cover up the money trail. Recruit your friends. Recruit your friends. Most cons will offer bonuses if you recruit your friends into the scheme. Sounds more like you're getting into the multi-level fraud and the Ponzi schemes. Professional websites with little to no information. These days, anyone can put up a website. Scam sites may look professional, but they offer little to no information about the company's management, location, or details about the investment. And no written information. Online scam promoters fail to provide a prospectus or other form of written information detailing the risk of the investment and procedures to get your money out. Again, when you do any investment, you got to have something written. Again, the promoters online, and they're good scam artists, they don't tell you to provide a perspective or other forms of written information that are going to detail the risk of the investment and procedures to get your money out. So again, you're dealing with online investments. This is information you need to know about. Now, I'm going to post this link in my comment section under the video. Now, what I'm going to do as well, I'm going to go back. Let me share my screen again. We're going to look at some videos because you need to know what's going on. And let's talk about investment fraud. Share use. Now, these videos are for educational purposes only. Share use. Share use.
What is an investment scam? You're contacted by someone you don't know, by message or phone, offering you an investment opportunity with guaranteed high returns.
This is real and legit. I just invested £500 and got back £10,000. Trust me, you should give it a try. Crypto mining really works.
Wow. How can I do that too?
I'll pass you on to my contact. DM her and tell her you want to invest. She's 100% legit.
Hello, I'm calling to offer you the chance to make a lot of money in just a few weeks.
But it's an investment scam, and a criminal is about to get their hands on your money. The criminal may pressure you with a time-limited offer if you invest immediately. They may also have a genuine-looking website showing fantastic returns. After an initial small investment appears to do well, you're encouraged to invest even more money. But when you try to withdraw your money, all contact suddenly stops. Stop. Are you being pressured to act immediately? Only criminals will try to rush or panic you into investing. Challenge. Could it be fake? It's okay to reject these approaches. Protect. If you think you've been scammed, contact your bank immediately. Report it to Action Fraud or Police Scotland. Find out more at take5-stopfraud.org.uk.
Now, again, if you think you're being scammed, or even before you make an investment, I would write down the pros and cons. Find out what your advantages are and what your disadvantages are. Because when it comes to investing, investing is risky. It's just like going to a casino. And when you play numbers, you may lose more than you gain. So the scams are out there, and you have a lot of people trying to make quick money. Now I'm going to show you some more videos. Fair use, fair use, fair use.
This video is about investment scams. Investment scams occur when criminals convince their victims to transfer money to a fake investment. The scam will often request small payments to begin with before encouraging larger investments with the promise of higher returns. Many investment scams involve Bitcoin and other cryptocurrencies due to its popularity over the years. We also see a lot of scams involving Forex, gold, property, art and fine wines. Basically any high value commodity. When advertising on social media, investment scammers will often Photoshop celebrities into their adverts, suggesting the product is endorsed by well-known and trusted figures. Then, once they've made contact, they'll often pressurise you to act quickly by claiming the opportunity is available for a limited time only. If unsure, my advice is to be wary of anyone offering an exclusive investment opportunity with unrealistic returns. Do your research and be sure to check the Financial Conduct Authority's register for regulated firms, individuals and bodies. And finally, proceed with extreme caution before making any investment decisions. If it seems too good to be true, then unfortunately it probably is. If you're watching this video and you've already been targeted by a scammer, then you're not alone. Unfortunately, hundreds of thousands of people every year are affected by scammers in the UK. Investment scams often result in the highest losses, which can be devastating for those affected, many of whom blame themselves, but it's not your fault. Current financial systems are meant to prevent and detect fraud, so if you've transferred large sums of money to a scammer, then those systems have failed. That's where we come in. CL Solicitors specialise in helping victims to get their money back from the financial system that was meant to protect them. We've already recovered millions of pounds for our clients, which is why we're one of the most trusted law firms according to Trustpilot. We never ask for any money up front, and we work on a no-win, no-fee basis, so you won't pay us anything unless we're successful in recovering your money. In addition to getting your money back, we're often successful at securing interest from the date it left your account, as well as compensation. We offer free initial, no obligation advice, so there's nothing to lose by getting in touch with one of our specialist advisors.
Again, like I said, now these videos come from the UK. Trying to find something that comes from the United States here, because in the United States, we have a lot of scams here. Fair use, fair use. Show you another video.
I'm going to make so much money through this new cryptocurrency investment opportunity. The person who referred me made $500,000 in a year. And all I had to do was attend this free event to learn the secret to tripling my money in months. Wait, halt. This is a scam. The only investment I made was a contribution right into the fraudster's pocketbook. The FTC reports that consumers lost more than $4.6 billion to investment scam fraud in 2023, and that was a 21% increase over 2022. Investment scam fraud happens when someone tricks the victim into investing money with promises of fast and substantial paybacks. Indications of this scam include using high-pressure sales tactics, guarantees of over-the-top profits, claiming the investment has little risk of losing money, receiving limited details about the investment itself, and claiming to have a secret method to making money. Protect yourself. Fully research the investment opportunity. Verify the seller's reputation, and understand that all investments carry some level of risk.
That's right. All investments, even your 401k plan. You go to the casino, which I went to the casino on Sunday, Saturday. You take money out of the ATM machine just to play the machines. It's risky. All investments. Why? Now, why are investments risky? Number one, a lot of us don't know how to invest. Some of us believe that we have to go through brokers. Even brokers wasn't mentioned in any of the videos I just showed you. Even brokers can be scammers, because if you think about it, if you're doing some investment, how do you know the broker is not legitimate? Or how do you know the broker is legitimate? You don't. Who are you going to ask? I would say this. You see all these individuals on Wall Street. You see how stressing that environment is. Well, you should feel the same stress when you're investing your money. And when something is too good to be true, it is. And if it's not worth taking the risk, don't take the risk. See, you have too many people who are desperate. And what these scams do is to get a reaction. Why? Because everything in these scams sounds so good. I'm going to give you artificial rates of returns. Now, we know you're not going to get a 40% rate of return. You might be lucky to get a 2, maybe a 3% rate of return. And that's going to be based on how much you put in. Like if I invest $1, I might get 2 cents or 3 cents back. Now, so the more money you have, the higher your investment is going to be. Because again, when it comes to the risk, there are rewards, but you must have the understanding of how the investment works. And too many of us today, we're too quick to jump into something without researching it. So what I'm here to do is to give you some insight through videos and articles about these scams, because Americans lose billions of dollars through something that sounds too good to be true. Many of us are down on our luck. Now, does this make any sense? You're a person, you don't make much money, and you go out there to invest in a Powerball. Well, what is the odds of you winning the Powerball? Very slim. In fact, if you go and get some scratch off tickets from a convenience store or wherever they sell lottery tickets, the likely chance of you winning a big prize is very small. Now, you may win some free tickets on the scratch offs, you may win a couple dollars, but when it comes to the big money, it's going to be low for the odds. So basically, before you invest, research, find some people like Edward Jones, those types of people who are in the business of investing. Because if you don't have any experience in investing, you're going to get scammed. And there's scams out there like offshore scams. Your money is offshore. They do that because it's hard to trace. See, these scammers, they're perfecting the art of duplicating companies' websites. They're putting their money offshore. This is why a lot of people hide their money when it comes to taxing. Well, this is why some of the rich, you say they don't pay taxes. Well, they hide their money offshore because their money can't be tracked and there's less regulations. See, in the United States, everything is regulated by the SEC, the Securities Exchange Commission. Well, when you put everything overseas or when you put everything offshore, it's not regulated. This is why you get these Nigerian scams. So you notice a lot of these scammers are foreigners. And you have people from the United States investing to those foreigners, and they're wondering why they don't get their money back. Because the scammers weren't there to give you your money back. The scammers were there to make money from you. That's because they told you something that sounded too good to be true, and you weren't prepared for it. The light bulb didn't come on. They got you to react through emotions. So again, whenever you have these seminars, whenever you have these gracious looking websites, these pamphlets that tell you you're going to make a lot of money, do this. Throw them in the trash. Because in the end, you're going to waste your money by getting scammed. And that's my commentary for this edition of the 411 Talk Zone radio show right here on YouTube. If you like what I just presented, please comment, share, and subscribe. And if you're looking for some STEM content, check out the QCIS channel, which I'll be presenting some information tomorrow. I'll try to do 401 Talk Zone radio show every Wednesday and QCIS every Thursday. Now, if you want to see more of my content after I record it on YouTube, I'll post it up to my Twitter page. And for the QCIS channel, I go one step further since it is an educational channel. A lot of training videos on that channel. Want to learn about engineering, money, have it on that channel. And when I talk about money, I'm talking about engineering economics. It's a STEM channel, science, technology, engineering, and math. Well, since it's educational, you can find that channel on my LinkedIn page. And in the end, be blessed for what you have. Don't worry about what you don't have. Always know that the sun rises in the east and sets in the west. And if it doesn't apply, let it fly. But if the shoe fits, wear it. Yeah, if it doesn't apply, let it fly. Shoe fits, wear it. If you don't like the shoe, change. I almost forgot my saying. But again, thank you for listening to this edition of the 411 Talk Zone Radio Show. Gotta wear the shoe. You gotta change the shoe if you don't like it. But again, thank you for listening to this edition of the 411 Talk Zone Radio Show. Till next time, my name is Leon Jones. You all have a wonderful, gracious evening. God bless you. I'm out.